Results from GM are out as well, coming fast and furious. Let's get reaction to those results. Joining us now, Tim Lesko, Granite Investment Advisors Partner and Portfolio Manager. He owns shares of General Motors and recently sold his Boeing stake. And Phil LeBeau is sticking around. And at first blush, Tim, it's a difficult environment for everyone. But let me see. If you're not flying, you might be driving. And the average age of the car is pretty old. Some of these automakers ought to be able to make a little bit of hay with the sun shining, or no?
Well, certainly when you have auto production shut down, that's going to begin to flow through the system where there'll be lower inventories. You've seen, at least in the Northeast, significant increase in driving miles as people start to come out of their COVID cocoon, and they're not flying, they're not going to hotels. They're seeking vacations that they can drive to. So certainly leisure travel is starting to increase. What that means for commuting travel and future car ownership remains to be seen.
I know that, Phil, you want to get in and just ask some specifics about GM, or we can talk Boeing, too.
No, sure.
Yeah, go ahead.
We've got some news from Boeing that's coming out in just a little bit. But my curiosity when it comes to General Motors, primarily it centers around the question of, you saw the shutdown in production, and we've seen a bit of a comeback in terms of demand for deliveries to dealerships. My question is this it? Does it plateau for the remainder of this year, or do you expect it to increase from here?
I don't think we expect to see normalized earnings again until mid-2021 in any of the industrial companies that were forced to shut down. It's very hard to see when you're having 64,000 new coronavirus cases a day what the end of this is. But the shutdown really makes us focus on their ability to survive the shutdown, not how many cars they sell this month or next month, but really what are normalized earnings and how quickly we can get there.
The other big story, and we will talk a lot about Boeing. Why'd you sell your Boeing shares, Tim?
Well, we've been a long-term Boeing owner. We've owned it for close to a decade, and we rode through the 737 MAX crisis. But the coronavirus crisis hitting Boeing really changes the trajectory of earnings. Boeing was on a path to $20 a share in earnings, which made that $400 price seem reasonable at the time. And now that you see these production decreases, 31 a month on the 737 MAX, and even more importantly, maybe 6 a month on the Dreamliner, really just puts that path much further into the future. It's still a duopoly, still tremendous barriers to entry into the commercial aviation business, but we've really pushed out when we're going to see those earnings come back to Boeing.
Would you?
Hey, Joe.
Oh, yeah, go ahead, Phil.
We've got a little bit of news when it comes to Boeing. A note from CEO Dave Calhoun to Boeing employees, essentially recapping all of the news that I just reported regarding the second quarter earnings results and the outlook. But as I mentioned, there has been some speculation that Boeing may finally end the 747, really the plane that has defined Boeing over the last 50 years. And he says in here that they will not be changing the production rate, but they do plan to complete production in 2022. So there you have it, the 747, really the plane that coined the term jumbo jet. That will end in 2022, and that's going to be a piece of news. Not a surprise, but certainly whenever you have that type of a product that really revolutionized commercial air travel, and the fact that they are officially ending it, that's going to be noteworthy today.